Hey guys, welcome back to the channel. If you're not a subscriber, make sure you hit that button, become a subscriber. We've got contests running all the way through October and beyond. A couple weeks ago, we released a scam alert video that showcased 3 business models that we just simply don't agree with. And we're here to educate, guys, plain and simple. I'm not here with a dog in the race. If something's a terrific technique, we build it into our coaching. And if it's dangerous, I'm gonna highlight it and I'm gonna warn you about it. But we don't consider ourselves vigilantes on this platform. I'm not here to throw other businesses under the bus. But if I can at least help you guys recognize when you might possibly be working with a shadester, then I'm certainly excited about being able to do that. And I think we're gonna be learning a little bit more today that might give me some concerns and might give you some cause for pause as you move forward in some of your strategies. And if you're entrepreneurial, if you're a real estate investor, you simply have to know about this. So go back and check that scam alert video. A lot of people were speculating, what 3 companies were we talking about? Some of you may have had it right, some of you I think were off. But there were a couple people DMing us after the fact with a recent release of a video that had me awfully concerned, and I hadn't gotten through this whole video yet. I wanted to go through that with you. I wanted to bring you guys along with me. So let's go ahead and just watch this video. What I'm gonna do is pause it along the way anytime I hear something being discussed that I have an opinion about, good, bad, or indifferent. And we'll just react together and I'll give you some thoughts about what I'm seeing. But we are gonna go ahead and leave the video out of today's training just for purposes of anonymity. Again, I'm not here to try and cast shade on other people's businesses. So let's go ahead and dive in. I wanna educate you guys about what I'm seeing here. Okay, so right out of the gate, big red flag for me, buying real estate using credit cards. Yes, it's true that new real estate investors often run into the trouble of getting funding or having enough capital to dive in. I see that with our coaching members regularly. That's why we're always in pursuit of alternative capital that we can use. And so it's not that we're opposed to alternative capital, but we have strong opposition to using credit cards to purchase real estate. And we're gonna dive deeper into that, I'm certain, throughout today's video. Okay, let me stop it right there. So one of the very first things that was highlighted in this video is that they set up the business credit accounts for you. One of the biggest things that I cautioned about in that previous scam alert video is handing over power of attorney for your personal credit. Anytime you give somebody else control over your credit, you better be prepared for bad things to happen to it. I would recommend completely severing any relationship you have with other people to your credit report. I've said it time and time again. Anytime you can avoid co-signing with somebody or giving away power of attorney, you should. So let's keep moving along. Okay, let's take a quick break. What I'm hearing right now is a recommendation to open 0% business credit card accounts in order to then access that money in one of 2 creative ways without paying the cash advance penalties involved. Now, bear in mind, in order to work with this third-party company and give them power of attorney to open these business credit card accounts in your name, damaging your credit, you're gonna pay thousands of dollars to get that. Now, I've seen on the low end from mutual coaching members and clients of theirs that they'll charge something around $3,500. I can't remember hearing any less than that. And I've heard that they'll also charge a percentage of how much they end up getting. Now, according to this video, they're able to get most of their clients somewhere in the neighborhood of $50,000 within 30 days, sometimes as much as $120,000 or even $150,000 within that same 30 to 60-day period. Now, if you're paying a percentage, let's go off of a conservatively realistic percentage and call it 10%. Most business credit companies that apply for capital on your behalf or encourage you to apply for business capital for yourself will charge you somewhere between 9 all the way up to 18 or even 20% as a one-time commission. So if you're getting access to $100,000 in 30 days and you're paying, say, 10% for that, it could cost you as much as $10,000 for that service. So somewhere between $3,500 to $10,000 is conservatively realistic to just the upfront fee here to get access to the 0% credit card account. And bear in mind, at this stage, you don't have any money from this account available for use yet. So let's go ahead and continue to see exactly how they recommend getting that money off of there without paying cash advance interest, costs, or penalties. Oh my gosh. Okay, you're not gonna believe what I'm hearing here. What I'm learning very quickly is that this is most definitely an extremely shady approach to getting cash out of your credit card. Let me explain. According to this video, you are being recommended to not just pay an organization to open credit cards on your behalf, where you will be responsible with a personal guarantee. Even though it's a business credit card, you are responsible with a personal guarantee to pay these credit cards back yourself. So not only is your personal credit being checked, but it's being negatively affected, even though that credit card account is most likely not reporting to your personal credit report. The inquiry to check your credit is having a negative effect each and every time a credit card is pulled. Now, most of the mutual clients that I've worked with that have shared experiences with this organization have had many credit cards opened on their behalf. Somewhere in the neighborhood of 3, 4, 5, 6, and beyond opened on their behalf. Every single inquiry up to the most recent 10 over the most recent 12 months are negatively affecting your credit scores. So already, right out of the gate, I find that to be horribly dangerous. Beyond that, what I'm now hearing is they are using a creative technique by having you actually use the credit card account through a third-party gold sales website where you're purchasing gold with the credit card with the intention of a few days later to turn around and sell that gold. And this process alone apparently costs an average of an additional 2 to 4%. Are you not seeing the costs involved here? Because we're gonna come back and circle back and hypothesize some of what I would consider to be even just best case scenarios here. And mathematically, I'm already struggling with it. So let's go ahead and keep going through this video. Okay, so they are emphasizing that in order to keep business credit card accounts off of your personal credit report, that you do need a tax ID number, an EIN or a TIN, where you'll have to set up an entity. They're also mentioning that they're gonna do this for you. Again, this power of attorney idea, this concept that you're gonna give this much power to somebody where they could literally destroy you financially. Now, I mentioned this in the last video, and this is what makes me the most uncomfortable about this proposition. I have coaching members that are going through VIP's 30-month coaching program that have had LLCs and credit cards set up using their personal credit without the coaching member even having any idea about the business name or the subsequent credit card that's associated with that business name. It was just sent to them. It just arrived in the mail. Does that make you feel safe? I have to admit, Mike and I were sitting here talking about this prior to sitting down and filming this video, and we were just discussing what we thought the premise of this technique was, and both of us were just sitting here shaking our heads, thinking, who would be foolish enough to do this? But I happen to know that this is a highly active company with a lot of business and a lot of clients. And it sounds really appealing on the surface until you start digging in and realize exactly what's going on. So we're gonna try and uncover the long-term impact of this and what the real risks are by the end of the video. So let's just keep moving along. Okay, so we've gotten to a part where they're talking about the personal guarantee, and we're discussing exactly the impact of personal credit scores on this process. And the individual is explaining that a 680 minimum FICO credit score is recommended before you can start this process. I am here to tell you that so many people have been crippled with this process, and I have been there to try and clean up the aftermath. You understand how dangerous this is? That very first inquiry could take your 680 credit score down to a 660. Go in and add 5 new inquiries on the credit report and see what will happen then. Could it go to only a 660 and not drop further? Of course. Could it drop below a 660? You bet. To even suggest that someone with a 680 go out and try and get access to $100,000 or $150,000 worth of credit card availability is ludicrous. I can't even believe what I'm watching right now. Okay, so we're starting to see the exit strategy being discussed. According to these experts, the recommendation here is that we are not only pulling out the 40, 50, 60,000 or more based on purchasing and then later reselling gold through an online account, To get access to the cash, it's just a simple workaround, almost a credit card hack, if you will. We now have that $40,000, $50,000, $60,000 that's used off of that credit card account, which is then taken and used to purchase a piece of real estate. And the objective, of course, is to buy real estate that you could later turn around and refinance. So that's the premise here, is getting access to that cash for a short period of time during the 0% promotional period, which is generally going to extend over 6 months, 9 months, 12 months, 15 months, sometimes as long as 18 or even 24 months, which are not as common. But you have a very short period of time to get that $40,000, $50,000, $60,000, $100,000, or even $150,000 or more paid back to the credit card company before you're retroactively penalized on all of the interest costs during the promotional period. Boy, oh boy, I'm sure you could agree that we're playing with fire on this one. Let's go ahead and see what they say. It's interesting to me how nonchalant people who have a vested interest in their strategy, how nonchalant they can make the best case scenario sound, as if it's just that easy. You can go out there, buy your property, all you have to do is refinance into a 30-year loan. It's not even discussed here yet that some of the properties that are highlighted by these specific individuals don't even cost $50,000 to purchase. They're in the low price point areas in the country. They might run $30,000, $40,000, $50,000. You could buy that property outright with the cash that you get from one of these credit card accounts. And when you turn around to try and refinance it, you can't, because most banks won't even lend less than $50,000 for a mortgage. So how do you get out from underneath the credit card balances before the promotional rate adjusts and it drowns you? That's the question I'm looking to get answered. Throughout this video, they continue to reference this website and show a screenshot of it. And I find it deceiving that the website so blatantly shows $50,000 to $250,000, 0% interest. Yes, it's 0% interest introductory period. That's the problem with this process. If I were to ask 100 of you, how many of you thought that we were heading towards another recession? I would be surprised if anybody had their hand down. I think most of us agree a downturn is on the horizon. It's speculative as to when. It could be 3 months from now, it could be 3 years from now. But to take a risk of pulling money out of a 0% credit card account and simply crossing our fingers that the market doesn't adjust before we turn around and attempt to refinance that non-owner occupied property, emphasis on non-owner occupied, because getting mortgages on non-owner occupied investment properties is substantially more difficult than getting mortgages on your primary residence. So I look at this and say, to think that we're just going to cross our fingers and hope that the market doesn't turn and I'm going to be able to refinance out enough money to go back and pay these credit cards to zero before that 0% expires is a huge gamble. And so far, I have yet to hear any recognition of that on this video. Okay, this is really starting to stack on itself at this point. So the recommendation now is you can actually double or triple or even maybe quadruple your results if you just drag all of your other family into this. I mean, imagine if you could double your $50,000 to 100 if you just brought your spouse in. What if you had an adult child? Don't you want to destroy their future too by bringing them into the mix? Of course you do. We could get 150. Imagine what we could do with $150,000 instead of 100. So we don't have to just ruin our lives, we can ruin our kids' lives too, guys. This sounds really genius. All right, let's go ahead and see what else they have to say, because I have yet to hear any real protective or preventative maintenance matters being discussed in how do we actually stay safe in here. All I've really heard so far is we're taking enormous risks and it's gonna cost us a ton of money to take them. So let's see what else they've got. I may have spoke too soon. I just found out there's no additional cost for a spouse or to ruin your children's future. It's gonna be free. So it's all built into that $5,000, $6,000, $7,000, $10,000 you've already paid for this dilemma. That's built in, so don't worry. You can ruin everyone around you's lives as well for free. So let's check out the rest. Okay, so they're touching on the gold idea once more. Kind of curious here. The idea is all we have to do is buy gold and then sell it. This is very simple. We just sell it a few days later. What is the single biggest drop in gold? Ooh. April 15th, 2013. Gold suffers biggest one-day drop since the 1980s. Gold futures on Monday suffered their biggest one-day decline since the 1980s. So we see ranges from 5.8% to 8.2%, all the way to 9.3% in this article published just 5 short years ago. Let me ask you a question. You take $50,000 off of a 0% business credit card account, and of the 43 some odd $1,000 remaining after you pay for their fees and the gold company's fees, you now have $43,000 worth of gold. What happens if that gold drops by 10% over the course of the 3 days that you're holding it? So it's now worth something closer to $39,000? I'm failing to register how this concept protects the people involved, but maybe I'm missing something here. Okay, so let's go ahead and just check one of these resources. So it sounds like buying gold is not your only option. Thank God, right? We're safe. So let's go ahead and just check this website called Plastic. Earn more credit card rewards. Pay your bills with your preferred rewards card. Pay with credit cards where cards are not accepted for a simple 2.5% fee. So now we're building in another 2.5% fee into this if we want to use Plastic to earn the power of cash. Bill pay with benefits powered by card. Let Plastic pay for itself. To offer this service, Plastic charges 2.5% fee. There's a 2% cash back on credit cards, so essentially they're claiming you're washing it out. There's a 0.75% business tax deduction on those fees, according to Plastic. Certainly would want to run that past your tax professional. And then there's a 2% early pay discount with vendors when you pay early. Very intriguing, compelling resource. Certainly nothing to dive into without serious research. Let's see what else they have to suggest here. Okay, so the premise is starting to become more clear at this point. It sounds to me like they're doing dramatic A/B comparisons between hard money lending and what you could get by playing the credit card game. Again, I think there's just inherent flaws with this. And when they're laying out the arithmetic, there might be some mathematical advantages in that you might end up coming out a little bit ahead by going about this from this direction. However, I can tell you right now that there is a lot more risk involved with this rather than going about it with hard money. But again, I think hard money is appropriate only in certain circumstances as well. So I think that the real problem with a video like this is that it gives false hope to people that really shouldn't be out borrowing money the way that they are directing. If you cannot adequately invest in real estate by playing by the bank's rules already, you probably should be exploring how to create wealth elsewhere. And I want to emphasize that real estate investing is simply not a solution to your financial problems. If you're having financial problems, real estate should probably be something that you consider down the road. You need to get those problems fixed, and there are much less expensive, equally or even less time-consuming ways of growing your income streams. And real estate is just simply not a fast way of building wealth. If you don't have money, real estate is a slow, unsexy, methodical, and requires extremely consistent techniques in order to actually achieve success doing it. So about halfway done with the video, let's see what they say. Okay, so semantically, we're digging into some of the the nuts and bolts of how these accounts are approved, and what's being discussed is that these accounts are oftentimes negotiated for higher limits than what's initially approved. Sometimes people aren't even approved at all, and then because of that negotiation, an approval can happen. Now, again, just think about this for a minute. What would a lender let's call it Chase or Discover, Amex, any of these accounts that are looking to provide you access to a credit card account. Let's say I apply through Barclays for a new credit card, and it's a business account, and I apply and I submit the details they ask for on the application, and we want to explore getting a higher limit than what was initially approved. What would a lender look for in order for that to happen? They've already seen my credit, so it's not as though my verbal negotiation is going to somehow justify what is being shown on credit versus what they would have rather seen to give me a higher limit. So they're looking for explanations based on the performance potential of that business. If you're the lender, you would want to hear things like, well, our business is just getting going, but we're taking off, and we're seeing all of these great proofs of concept, and we anticipate doubling our revenues over the next 12 months. These are the types of favorable conversations a lender's going to look at and think, okay, maybe this borrower deserves more than what we initially approved. How can somebody do that on your behalf? How can that be done by simply handing power of attorney over to an organization that fabricated a business out of thin air and then turned around and applied for a credit card account in that business's name? What type of a conversation unfolds when those people are actually contacting the underwriters and saying, I have a power of attorney for this individual, I'm calling representing them, we would like to get $20,000 instead of $15,000 available. We would like to get $50,000 instead of $40,000 available. To me, there are far too many question marks and far too many concerns. I would never have somebody making those calls representing me and my credit, because if anything is disclosed inaccurately, that's fraud. That's fraud. You cannot be deceptive in the application process. Now, is deception taking place here? I can offer my opinion, and that's about it. I have not done a full investigation on these companies, so I don't want to start to accuse them of fraud, but there are far too many question marks that are unanswered for me right now, where I would ever go out and pay 15, 16, 17, 18, 20% in costs of the amount of money that I'm borrowing. It is not unfathomable here that given the cost of the gold company, which is going to end up charging between 2 to 4% according to the video, or plastic with a Q that charges 2.5% according to their website, along with the $3,500 up to a percentage of what's acquired on the capital accounts that this third-party company is acquiring for you, that you would end up in the price range of $10,000, $15,000, $20,000 in fees. So 10, 15, 20% on the top for a 9, 12, at best 15, 18, or 24 month 0% period. Most common 0% introductory ratios or rates are coming in at about 12 months. So if you're paying 15% in fees over a 12-month 0% period, which is the only advantage this conversation even has, is being able to take advantage of it during the 0% introductory period, doesn't really sound like a great deal if you then have to find a way to turn around and generate at least a 10, 15, 20% ROI on that investment in the first year to break even. I really like this part of the video. They're discussing the difference between automated underwriting and having a manual underwriter review the file. And I think there's a lot of great points being discussed here. Just to share a personal story, what they're basically saying is things can systematically be declined. Things can be systematically approved for less than what you might be eligible for as a borrower. So by just simply proactively placing a phone call, you can get somebody on the other end of the phone. Much like I did with my recent collection and getting that removed, which we recorded, so make sure you check out that video as well. You can end up with a better set of results than if you were passive about it and you just accepted the outcome. And this recently happened to me with my rental property. I've got a rental that we're currently remodeling right now. And we recently had a hailstorm that passed through with fist-size hail balls falling out of the sky. And obviously this totaled out a lot of roofs in the neighborhood. And when I went to approach Allstate about a claim, I could tell that there was going to be some resistance right out of the gate. Number one, my agent no longer felt like a buddy. This is somebody I've had for almost a decade. And all of a sudden, I'm putting in a claim and I'm getting zero support from my agent. Number two, they told me they were going to do the inspection with a drone, which it kind of made me a little uncomfortable as well. I felt like they were kind of taking shortcuts, but initially I thought, hey, maybe this is just the quick and easy way of going about getting this roof replaced. I had a contractor hop on the roof to double check it before the inspection, and sure enough, my fears were real that the roof had been totaled. There were many pieces of damage, and not only was the roof damaged, but it was beyond repair because there was a certain type of shingle, it's called a T-lock, that was being used, and that T-lock is actually no longer manufactured. So we ended up waiting for Allstate to get out there with their drone inspection, and about a week later I get a phone call, and sure enough, Allstate's trying to weasel out of paying this claim. They say, you're right, we can't replace or repair a T-lock, but we're gonna find a shingle that comes close to matching it and do some repairs. The repairs are gonna come out to about $850. Your deductible, unfortunately, is $1,000, so this claim is considered closed. Frustrated, based on what I'm hearing from the contractor, that this is a 100% replacement situation, and then learning from my insurance company that they weren't gonna do what I wanted them to, I went ahead and got back on the phone with my agent. And again, absolutely no support. His name's Jim Kinney with the Allstate agency here in Denver. I already wrote a 1-star review for him on Yelp because I was just absolutely disgusted with his approach to customer service. And I decided I wasn't gonna give up. So I teamed up with the contractor, and the contractor and I went hard at Allstate. We also had an attorney lined up, and we were ready to go to bat. The attorney called this, and I quote, a slam dunk, which made me feel good. And after about a half dozen phone calls and 3 total inspectors, of which only 1 inspection was ever done, the drone inspection, we were able to work with a final adjuster there that finally just had enough with Allstate and said, that's it, we're replacing this thing. And as of last week, we dropped a brand new $12,000 roof on this property, and I will have absolutely nothing out of pocket on it. So I absolutely implore you to push hard when it comes to getting your way. Don't stop once, be proactive. Companies like insurance agencies, companies like banks, they count on people to roll over and be a pushover on this thing. And so you're gonna need to make sure that if you want to bank and borrow the right way, that you really step up to the plate and you do everything you can to get what you want. All right, let's go ahead and finish up the video. Okay, so we've landed on another exit strategy, or really more of a supplementation of safety, which is really using the juggling technique and rolling balances from one account into the next. And towards the end of their funding period, which is a 12-month relationship with their clients, they're opening up another round of 0% accounts for an average of 12%. For an average of 12 months at 0%, and then rolling previous balances into those new accounts. Guys, these normally come with anywhere between 3 to 5% balance transfer fees. So now you're experiencing yet another wave of 0% costs. 0% is such a great gimmick, but it's not typically going to work out unless everything is flawless through this process. We're just about done with the video. I'm going to share one little tidbit of information with you here at the end, so make sure you stick around, and then I'm going to give you some words of advice, and hey, who knows, maybe we'll call a credit card company ourselves and see what they have to say. Okay, I think I've seen enough. So one final thing that I think is important to be transparent about. I've had conversations with this firm, and they were wanting my business, and they were wanting to pay me for that business. And we had lengthy conversations, multiple hours of time spent trying to sort through the advantages. And, between calls, I just couldn't shake the overwhelming feeling that this was not the right direction to be pointing anybody. And so we chose not to do business with them, and we decided to forego the affiliate offer that they made. For us, it's never about simply trying to pair up with anybody that will pay us and complements our various subject matter. We're here for the long run, my friends. And the key takeaway from this is you wait and see what happens. You wait and see what happens when the next downturn is officially upon us. We have to prepare ourselves for that recession. And if we're not prepared for that recession, doing something like this is going to come back and catch us and ruin us. It will ruin us. I saw people that had done far less than this that were destroyed because of even small credit card balances. My credit cards right now are paid to zero. They will be paid to zero until we go through that next recession and we start to see reason to believe that we might bounce, at which point I have no problem using techniques like this when we're back into a bull run. But to use it at the very tail end of a bull run is incredibly dangerous and unnecessary. There are many other ways to go about doing this much more safely. So guys, I'm very curious to see what my credit card companies are gonna say about this. I think it might make sense to pick up the phone and call a few. So make sure you check out the video because we're gonna launch another video just to get their first impression of this idea. I'm also curious to know what you guys think as far as whether or not this violates the terms and conditions of your credit card accounts. Go ahead and read through some of the terms and conditions, go online. All of those are easy to locate, even just from your online app. Read through. I know the terms and conditions can be awfully long, but maybe it says something in there. I'm curious what they'll say verbally. I'm curious what it says in writing. So go ahead and throw your comments below. What did you guys discover? Is it legal? Is it against their terms, their policies and procedures? I don't know. In the meantime, if you guys are sick and tired of your money not being where you want it to be, then go ahead and in the description below, select the link for freecoachingcalendar.com and reserve a date and time for your one complimentary coaching session. Make sure you have at least $500 worth of positive cash flow left over each month after all of your bills and discretionary spending has been paid. And as long as you have at least $500, we can achieve incredible progress together. We can really put you on the fast track, and we offer one free coaching session to help get you started. Because the wait for those free coaching sessions has grown so long, all the way out until next spring at this point, going into even next summer, go ahead and select the quick start, one of the two quick start options that are available there if you want to skip the line. So if you're urgent about this, if you don't want to wait until the next downturn, if you're worried that the market is already starting to fluctuate, you want to be in the best position possible, then dive in and take one of the quick start vacancies. Do you have any idea how much you're losing by sitting back and doing nothing right now? Do you have any idea how much you will lose by waiting 6, 7, 8 months for a free coaching session rather than just simply enrolling and paying and getting started? Let me reassure you that if you choose to pay and take a quick start vacancy, we are going through an in-depth analysis to determine compatibility before we just simply assume that this is the perfect fit. And if at that point we decide it's not, we're gonna refund you your tuition and we're gonna void the membership for now. So there is absolutely no risk to you to dive in and start getting your money right. The biggest risk to you is to do nothing. The biggest risk to you is to take reckless steps and do things like this that put you into gobs and gobs of unnecessary debt that will flat out ruin you when the market turns. So you've got to be extremely careful, have extra sets of qualified eyes from people that do not have a dog in the race. People like this have a dog in the race. People like this are going to continue to drive you to get access to unnecessary credit because that's what they sold you. They are paid based on those results. If you surround yourself with people that are not paid based on your decision, then you can trust that their information is not biased toward their own self-serving interest. So that's what we are here to provide you ourselves, and we look forward to that conversation. Again, select your preferred option from the link below, freecoachingcalendar.com. Make sure you are also an active subscriber on the channel and click that post notification bell in order to be alerted every time we upload new content. And the reason is not just because we're going to continue to give you excellent information like this and warn you about things that aren't good and make you aware of things that are great. It's also because we have awesome contests going all the time. And one of them right now is that we're giving away a free $25 Amazon gift card every week. We're giving away one free 2-hour Skype coaching session with yours truly every month until October. And we're picking one of those lucky winners to actually fly to Denver for the grand prize. It's a round trip, 2-night stay here in Denver where we're going to actually sort through your finances and spend the afternoon doing so. And we're going to actually go out and have a great time, maybe take the Jeep out, do some off-roading, just get to know each other and just have a blast and just share in the progress and in our successes together. So I'm looking forward to that. In order to be eligible, you know what to do. We'll see you on the next video. Until then, make it a great day, friends.